Subscribe to Simply Bitcoin.
No.
People know who I am.
Is this another? Yeah, they know. Google. They gotta Google him.
Yeah.
Okay, we're good. We got it now.
Oh yeah, we got to have our advertisers, right? So, who writes these, by the way?
AA.
SAS Corp.
Pretty good.
It's in the ad copy. SAS Corp.
I'm James Lavish, and this episode of the Meme Factory podcast is brought to you by my new macro focus series, the Lavish Lubricant. Does the current state of the world tie up your insides? Are you in a permanent state of confused constipation? Well, the Lavish Lubricant newsletter is right up your alley. I've taken all the macro forces in the world and condensed their movement into a single newsletter, creating the first ever non-physical laxative, inducing an auto-defecating event upon consumption of the content. That's right, the world is now so scary that the words describing it can make you soil yourself. Better and more effective than prune juice, coffee, and bran flakes, this newsletter will keep you informed and light on your feet. So sign up for the Lavish Lubricant newsletter today, and I guarantee you'll be part of a large movement. My wife is literally standing in the doorway here staring at me laughing.
Congratulations.
She just literally asked, what the fuck is going on?
That was a good one. I have to admit, that's good.
Don't worry, honey. Just losing subscribers for the newsletter. All right, so James, I know you're a serious bloke, but there's been a lot of funny stuff in the news recently, and I figured it would be a good time to bring you on and merge those two worlds. Namely, the funniest thing for me has been the BLS constantly revising the jobs numbers to a point where now it's like, not just it wasn't as good as they thought it was, now it's like, we've lost jobs? I don't understand what's happening. Could you enlighten me on what's happening here?
Yeah, so the Bureau of Labor Statistics is it's part of the Department of Commerce, which we learned that the head of the Department of Commerce this week had no idea about these stats that were coming out, which was fascinating. But what we're talking about is the job numbers and how many jobs are created every single month. Well, the original estimates that had already been revised downward over the course of the year were that we had created 2.9 million jobs over the last year, which is about 242,000 jobs per month. This week, a couple days ago, the Bureau had announced, and everybody was anticipating it, that they got a tighter estimate that was going to be slightly lower than that 2.9 million, and it could be as much as 300,000 to a million jobs less than they originally thought. And that number came in at 818,000, I believe, which means that 818,000 is 68,000 jobs per month that they were off by. So so that means they didn't create 242,000 jobs per month. It was 174,000. So it basically said they have absolutely no clue what they're looking at, or their model is garbage. And so we we have this saying on Wall Street that for financial models is, look, garbage in, garbage out. And so that's clearly what we have here. And the reality of it is, Greg, is they have this model within the model, and the model within the model is the birth death model, and that it sounds nefarious, but what it's about is the creation and dissolution of companies. And so they try to estimate how many jobs are created or lost from the creation or dissolving of companies. And they were wildly off on that. Obviously, they were a little bit too optimistic. The funny thing is that, the current administration is out there touting how great they've been about creating so many jobs. Reality is that they haven't really created as many jobs as they say they have. They reintroduced jobs that everybody lost during the pandemic before they took office, and they've just now reinstated them, basically. And then this past year, they didn't create anywhere near as many jobs as they've been claiming. So it's just it's kind of a black eye on everything. And the question is, was it intentional? Because we're talking about a 28% miss on the number. I mean, it's mind-boggling. This is not a statistical error. Would be maybe 3%, 5%. This is so far beyond that. It's like a multi-sigma event that's just
like
ridiculous.
10 sigma.
Just points. It points. It points to just. I mean, it's hard to say that it wasn't manipulation purposefully. So, and they got caught at it, basically.
Has there ever been a miss this bad one way or the other?
There has, but it hasn't happened for a long time. It's like I think it's before the great financial crisis is the last time it happened. So they've had some big misses. I mean, if you look at the chart from year to year, they're always off. It's just a question of how much. This was just a big one, and in a very optimistic direction. So kind of interesting during an election year. That's all.
What kind of things are they running in the economy based off of these numbers, right? Like what is getting manipulated?
What you mean? What is the outcome of people using these numbers?
Yes, like if they're predicting a higher number of jobs that are coming on, is that, what exactly is happening in the background what are they using these numbers for?
Yeah, it's basically economists are using them, and economists within financial firms to determine what they believe the interest rates are going to be, because we're all, we're watching the Fed trying to figure out whether they're going to be lowering rates. So the question is, did they manipulate this, so it would give the Fed firepower to cut rates in September and just have enough firepower now that it can now they can look at the inflation. They say it's coming down fast enough that we're kind of tackled that issue, which is not, I mean, that's a whole nother problem. But if their dual mandate is stable pricing and full employment, so now they can turn around and say, well, we don't want to we don't want to keep rates so high that it starts affecting the employment number. And the reason for that is we just tripped the SOM rule, which is that basically says that the unemployment number, like the unemployment rate, looking at that, if you take that number, you average the last 3 months, if that average is more than 0.5% from the low over the last year, that means that we tripped the SOM rule and we are either in a recession or headed into one. And that was created by Claudia Sahm, who was in the Fed herself at one point, and she's been in think tanks or whatever. But they have adopted that as one of the piece of data they look at. But anyway, so the point of all this is that you've tripped that. Now this kind of gives the Fed it gives them the firepower to say, or the backing to say, all right, look, we're looking at the employment, and we want to make sure that we don't drive the economy into a recession where unemployment spikes. And if you look at historically, Sean, once unemployment does trip the SOM rule, it accelerates upward pretty quickly. And so you historically, and so they are definitely concerned about that, because it's a hard train to stop. Because remember, we're in a service sector economy, very financialized. So when you start losing service sector jobs, and then people stop, so it kind of steamrolls where people stop spending because they've lost their job, which leads to less people spending on service, which means they lose their job. So it's kind of, we're not huge it cascades, because we're not huge exporters, we're importers. And so we import and we have services jobs. So it's a really difficult thing to control for the Fed if they're trying to manage that number. Now, the amount of control they actually have on that's questionable, because this year has been different than a lot of other years in this cycle, because of just the sheer amount of spending that's coming out of the capital, out of the government. They're spending so much money that they're kind of papering over certain areas, that now we've got expansion in certain sectors, like we just talked about, travel and service and restaurants and all that. While on the other side, we've got contraction in things that are interest rate sensitive, like commercial real estate, or companies and sectors that are really tied to the interest rates that are floating, that are not fixed, so companies that borrow on lines of credit and that kind of thing. And of course, the younger demographic who's using credit cards, you're seeing now they're starting to default at a rate over 10%. So that there's a lot of different things that are going on. And it's almost like we have two separate economies in this nation right now. That was a long answer to your question, but that basically means that people are looking at that for clues. The Fed's looking at it, and investors are looking at it for clues as to where rates are going.
Well, it's interesting because, go ahead, Greg.
Continue. I was switching gears.
Oh, I was just going to say, well, it's interesting to me because if you think about what the Fed has done over the last few years, it's been tightening, they've been raising rates, they've been keeping rates higher. And when you look at what happened, what we were all calling out in 2020 was, we're lowering interest rates and we're printing money, and that's going to cause inflation. And they said, no, there's going to be no inflation. That's not going to happen. We did this in 2008. We didn't see any high inflation, and we can do run the same game again. And then boom, high inflation hit because they left rates too low, too long, and printed too much money. And then we told you so. And then they go, well, we never saw it coming. And they were essentially they reacted, right? Where if you were proactive, you bought Bitcoin to protect yourself, to opt out of their game. And then now it seems like the same thing's going on, where now they've tightened, they've raised rates for too long, and they're going, well, we're going to have the soft landing, which has been a lie the whole time, just like there was going to be no inflation, like it's going to be a hard landing. And they've raised rates forever. They've kept them too high for how much debt that we currently have. And they're saying, oh, there's no issue here. And then I look at it and I go, here's how I look at it. Either they're so dumb that they're saying that they're just react. That's the only thing that they can do, is they just react, or that it's a calculated move for some reason, which I am not smart enough to figure out what that calculated move is. but there's some type of calculation that they can create a problem and then become the hero of that problem. I don't know if that is the calculated move. That's what governments.
Yeah, they're
James,
honestly.
before you get started, we have a rule. If Rusty raises his hand, we have to indulge him.
Sorry. Hey, Rusty.
Yeah, that's okay. It's probably gonna help. He's probably gonna answer the same anyway. But yeah, I was agreeing, and it's like it seems like everything they're doing at the moment is pointing towards like super obvious they're gonna drop rates in September. So therefore, if it's super obvious, like all of the Japan thing, and like, oh, it's all sensitive, and so job numbers are down, all that kind of stuff. So what would the game theory be of them coming out in September and going, actually, I know you all were expecting the rate cut, but it's not happening, and we're going to keep it on hold or something like that. What's the game theory behind the opposite to what everyone's predicting?
Well, what would the reaction of the financial world be? It would be extremely negative. We have enough information that the economy is slowing down in certain areas, at least a large part of it, that would be a pretty big negative. And I think you'd see a sharp sell-off in the market. So I don't think that will happen. I think it's really more between, are they going to cut 25 basis points? Are they going to cut 50 basis points? And, to Sean's point, and Rusty, this, is that, look, the Fed is reactionary. They've admitted it. They say it. They're data dependent, and
Why are they reactionary? Why can't they?
What else can they do? They have to have data that they can rely on, that they've got cover for, like they need air cover for their actions. They can't just do it willy-nilly and say, well, we kind of feel like. They have to have data, hard data, even if it is severely lagging. That's the best they can do. The problem is when you have completely incompetent agencies or sections of their government that are producing these numbers,
like the Secretary of Commerce, who's oblivious to the BLS.
Completely oblivious. Like that's unconscionable that she doesn't know that number. Even if she she knows that there's a BLS. She knows that they produce numbers. Maybe she doesn't know which ones because she's too far above that and she's got too many people working for her and she doesn't know. But she ought to know that today or yesterday was a very big number that the entire investment community was focused on. Yeah. Like the whole world, the bond market was reacting, the stock market was reacting. This was a big deal. It's incompetence. So that is an issue. And Powell has said it himself. He said that it's difficult to make decisions sometimes on data they know that could be, completely off. And so that is a problematic, Do I think it's nefarious on the Fed side? No, I don't think so. Do I think they get a lot of political pressure? Yes, clearly. You've got Warren out there screaming about them, lowering rates. Then you've got Trump saying, I'm going to, basically tell the Fed what to do. What is this?
I ran a poll yesterday asking if Western schools should teach Arabic numerals in their math classes. This was Sean's response to that.
I had to troll the chat.
Yeah, so I think that covers that part. But yeah, that's where we are.
So, talking about fun data that nobody pays attention to, you had a tweet that cracked me up this week. It was that at this point we have a White House chief economist who's not certain how U.S. Treasuries work, and a Secretary of Commerce who is not aware of data from the Bureau of Labor Statistics. I wasn't aware of either of these things. Can you give me a rundown of what happened?
Yeah, so I'm trying to pull up that. You've got to pull up that interview with the economist.
I'll send it to you.
Yeah, you have it. It actually is pretty startling. If you can pull that up and just play like a short clip of it, you'll see exactly what I'm talking about.
Sure. What are you sending it to me on, Sean?
I'm going to send.
You have it, Sean?
I'm sending to the Meme Factory.
All right, give me a sec.
Okay, it's in there. Yeah, it's amazing.
Is that the one that doesn't exist?
Yeah, that one.
The Meme Factory chat does not exist.
When you hear that, do you potentially think that this new numbers could be a liability for this campaign?
No, when I hear that, first of all, I don't believe it because I've never heard Donald Trump say anything truthful.
It is, though, from the Bureau of Labor.
I'm not familiar with that.
When you hear that, do you...
Do you have the other one? So that's
a quick one. That was a quick one.
So that's her saying she doesn't know. She's not aware of the numbers.
Yeah, she's not even familiar with the numbers. Like all she would have to do is just go on Twitter and just see a couple tweets and she'd see the numbers.
One would hope that she's briefed on these things.
Especially when you go speak of the DNC.
Right? Exactly. The one I'm talking about is Jared Bernstein. I kind of try to find it here. Jared Bernstein, let's see. It was actually phenomenal. It blew my mind. And I don't know if there was something wrong with him on this day, but let's see. Okay.
He was dropping more truths than usual.
It was I want to make sure I find the right clip. I mean, it's absolutely mind-boggling that he. Okay, so here's the clip. You want me to drop it in? Let's see.
Yeah,
where you want to drop it?
Send to Greg's Twitter.
I just dropped in the chat here.
Oh, okay. I think I've got it. Hang on.
Yeah, volume can do that to you.
You say value can do that to you?
Value.
So I don't know if there was something, if he was like, it was, I think this is part of a documentary. I can't remember. It was just a number of months ago, but it was just.
Oh yeah, he's sitting in the
conference room.
He's sitting like an office room. Yes, I know what you're talking about.
What I'm talking about. Okay.
It begs the question, why exactly?
The U.S. government can't go bankrupt because we can print our own money.
It obviously begs the question, why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollar. So why does the government even borrow?
Well, again, some of this stuff gets, some of the language that some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do?
Oh my God!
They sell bonds. Yeah, they sell bonds, right? Because they sell bonds and people buy the bonds and lend them the money.
It makes sense to me.
So
this all makes perfect sense.
A lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to I guess I can't really talk. I don't get it. I don't know what they're talking about. Like, because it's like the government clearly prints money. It does it all the time, and it clearly borrows. Otherwise, we wouldn't be having this debt and deficit conversation. So, I don't think there's anything confusing there.
Holy shit!
So totally sounds like a Kamala speech. Just tell us we're all getting poorer.
I don't.
He's one of the chief economists of the White House.
Oh my God!
Yeah, so it's troubling.
So answering to your question, Sean, they're reacting. There's no mega plan there.
They're reacting. That answers the question.
Yeah, Rusty, go ahead, man. What do you got?
You're not smart enough.
Yeah, well, that's a question I was going to ask James. If he had to choose a job in the U.S. government, what would it be? Like, would it be like an SEC? Would it be like a Treasury Secretary or what would you go for?
James for president.
Me in the executive branch or in the government? God.
Yeah. We're talking about a scenario where there's a gun to your head and they say you got to choose, you got to fix this shit. What job would you take?
Head of Secret Service.
That's actually a great answer. Okay.
Michael Saylor's the president. He says, I need you to be in the government.
Wow. He's got a lot of smart people around him. I would have to I'd have to really think through that one, but good Lord, anywhere you want. I'd be the, the sous chef. I would, yeah, I don't care, whatever. If we actually have competent people in there, I'll work anywhere.
What's up, bro?
Okay, well then to change the question then, like what would be the best position to make a difference? Well, who's the person in there that can make the best choices to make a difference?
I mean, look, the way I see it is that the president is super important because he's the leader, but it's almost a figurehead in instances because he's got so many people around him that advise him on all these policies. It's just too much to know. I mean, I remember, when I grew up up in upstate New York, I knew Chris Cuomo, and we went to school together, and so I had been to the governor's mansion, and this. I mean, I was barely middle class kid. They were probably embarrassed to see me in that mansion with the clothes I was wearing, but I knew him from school, and so I just remember sitting down, and his dad, Mario, would come in with a stack of stuff. Like, it was just mind-boggling how much, and he would read until like 1 o'clock in the morning, and then go to bed, wake up at 4:30, and up at it again. And he did it all the time. It was crazy. So, to answer your question, you need an army of brilliant people around you to accomplish anything and to have anything. I mean, have you guys ever been up to DC? Have you ever been through the congressional offices and the White House and everything? I mean, the machine is massive. I was just up there a couple of months ago with Perry Ann and her group, the digital commerce group. We were talking to, the aides from different senators and congressmen. The machine it's overwhelming. It's massive. And I don't know how anything gets done there. Truly. I truly do not understand how anything gets done there. So, if I could do anything in there, I would probably work in, as part of the Treasury somewhere, and help them understand how we could actually apply Bitcoin to the balance sheet and solidify the balance sheet long term, and work on that within the Treasury. I don't know what position that would be, but if I had my choice, that's where I would be.
Bitcoin czar.
Bitcoin czar. Yeah.
What's up, bro?
Nice.
You've been patient with your hand up there.
Can you hear me?
Yes, sir.
Yeah.
The mic's working fine?
Are you trying? Do you want us to play the joke on you? I'm not sure what's happening there.
No, we're good. Go ahead, carry on.
All right, so moving over to okay, Rusty, what's up?
That was rude.
Yeah.
Okay, I got a question for you, James. What if when you're not a macro?
Can anyone hear
Rusty?
Rusty?
Right. I just reminded
Rusty,
Sean
I
about the
don't
joke,
hear
and
you.
now he's going to play it out.
Rusty?
No worries.
Is Rusty's mic
Can anybody
working?
hear Rusty?
Rusty?
Yeah, here we go. This is where you either decide whether you want to
Rusty
join
on
in on
mute
it,
right now?
James,
Can anyone hear Rusty?
or you join my side. What are you gonna play, James?
I don't hear you.
Can we,
All right. Good play. Peer pressure. Writing notes. Okay.
Rusty,
I
you
hear
didn't get that. If I couldn't hear you, I wouldn't be able to answer the question.
Yeah.
You made your choice. Okay, so the question is, when you're not macro James Bond, what are you doing? What's your are you like hang gliding or some shit? What's your outside of this?
No, I'm too broken from hockey to do extreme sports, but I do like to take photographs. So
Yeah, that's fine.
I like to take photographs. So I like to go out to. I mean, I've gone to some extreme places to take photos. Out in Greenland, and out in Disco Bay, in the middle of summer, and on a actually on a Russian sailboat. It was crazy. This is about, honestly, about 8 years ago. Yeah, it's about 8 or 9 years ago. It was pretty wild. And so that was fun, taking photos of the icebergs at midnight in Greenland, where the sun goes down and comes right back up. So it's pretty wild. That was fun. I went out to Iceland with some surfers from California, and they were surfing in the Arctic Circle, and so that was pretty wild. Took some photographs out there. Been up in like these in just little planes, little Cessnas, taking photographs of the the coast of California. So stuff like that. It's been fun.
Nice.
I like it.
I want to talk about why you think we can't stay past 58K for too
long. You mean why we can't get past it? What's going on?
I keep seeing everybody talking about the investors are buying 10,000 coin wallets or stacking more than you've ever seen, and then just like every day I wake up, the price is 58,000.
Yeah, it's pretty amazing. It's annoying, truly, but if you look at it, I mean, it's actually pretty healthy because we've had tremendous consolidation. So a lot of the any fast money that came in to come into Bitcoin through the ETFs, a lot of that's out, right? So you've got long-term holders now. A lot of those short-term holders have washed out from what I've read on chain. If you guys correct me if I'm wrong, but you've got a lot of miners that were washed out, continue to be washed out because, or just struggling to stay operational. They have to sell what they have in inventory to keep going because they've got these long-term contracts for energy. And even though they're not being profitable right now, they've got to sell coins to keep going. So that's another thing. You had the Mt. Gox, you had Germany. Now you've got rumors of US, and whether or not they've been out there dumping, 5 or 10,000 coins at a time, who knows? Again, I'm not the one studying the on-chain metrics, but it's annoying, Greg, but I think it's healthy. I think that the other thing is Bitcoin sniffs out uncertainty. We have geopolitical uncertainty. We have local political uncertainty. We have Fed uncertainty and market uncertainty, interest rate uncertainty. So whether or not we're heading into a recession. Then a couple weeks ago, we had that the yen trade, the yen carry trade that blew up, that took down the markets. That was problematic. Bitcoin took it on the chin. Why? Well, it all unraveled on a Friday. Bitcoin trades 24/7. So on Saturday, all the way through Sunday, it was selling off right into the Monday opening. And, because it's the asset that anybody can just sell. If you're a hedge fund, you're selling that one first. Why? Because you can sell it on a Saturday. You get out, and so I think that had that follow through scared people, especially new investors. Are like, God, this thing's just I knew it was volatile, but this is just insane. It's gone from 70 back to 49 back, this is just not normal for a store of value. And you're right, it's not normal for a store of value that is for short term, but this thing is so young, and so it's got $1 trillion in it, in a world of $900 trillion of investable assets. It's tiny. It's 0.1% of the investable assets, and it's going to be volatile, and that's actually good. It's a feature. So all of us on here understand that, and when this happens, what do? We're in there, picking away and buying some more. I was in there buying it, as much as I could get for my fund. We were buying more. In a way that I could, because we're invested, but and that's what you do. But to me, it's okay, Greg. I don't mind the volatility. I would like to get through this. It's been what 3.5 years since we've seen a real all-time high, and so we've had a run past our last all-time high. So it's been a long time, and it would be nice to have that, but we're going to get it. I'm extremely confident we're going to get it, and I think that it starts this year.
Are you
I think
looking?
Have you thought about have you thought about a strategy where you just buy below 58K and then sell it above 58K and just do that forever?
No, man, I don't want to. You've seen
Don't give
that
away his hedge fund
that
secrets.
that Bitcoin has like 90% or 95%. I can't remember. I tweeted it actually, Greg. I can't remember what the metric is, but in like 10 trading days each year. And that's where all of the return comes. So if you missed that, you're out. You missed it. Sorry. So I'm not willing to do that. What I am willing to do is when it does come down is to take on a little bit of leverage, not in the sense that I would get liquidated, because I'm talking about things like buying things that are levered to Bitcoin price. What's levered to Bitcoin price? Miners, public miners are. The Bitcoin ETFs that are more than 1x, and they're futures, so it's not a great long-term holding, but it's a great short-term opportunity. Things like MicroStrategy, it's trading at 2.2 times the book value of its Bitcoin, or the enterprise value of the Bitcoin. It's 2.2, so that will go up as in a factor to what Bitcoin does. Like things like that, you can do that. You can pick up things that are on the cheap when you do have these trading opportunities, in my opinion. So that's kind of the way I look at it.
So you're basically trading Bitcoin derivatives, but not trading the Bitcoin itself.
No, see, we're in my hedge fund, we're on a Bitcoin standard. I don't have any dollars. So the only dollars I have, I need to maintain the margin for Reg T at our prime broker. Like we're not levered. They won't give us any margin on our equity, but they do require a certain amount of cash in the account. Whatever I don't need there, it's in Bitcoin already. So what I do is I'll take that Bitcoin and then buy things that have been beaten down. So on a day that Bitcoin's down 10%, MicroStrategy might be down 20%. That's a good time to get in, and as well as the other miners, the Bitcoin miners, they can get really beat up 10, 20, 30% on, a 10 or 15% drawdown on 2 days for Bitcoin. Those are usually, it can be good pickups as long as you're not stepping ahead of a freight train and you know which miners you're buying and you're selective about that. So.
Yes, Rusty.
Yeah, I know I've been hogging the questions, but so if everyone ends up doing that, if everyone just buys miners and MicroStrategy instead of buying the Bitcoin, then does that stop Bitcoin going up, or are you just relying on MicroStrategy to buy the Bitcoin that you were going to buy?
Well, I think it enables them to, right? And look, remember that my strategy in the hedge fund isn't just to own Bitcoin. I mean, anybody can do that. What I'm trying to do is augment the returns opportunistically. And then when we find companies that can use capital, that are young companies, and the venture capital side of my firm. So we have a public side and a private side. The private side I can't trade. It's what it is. We make investments and that money is locked up and those companies are using that capital. But this allows me to grow the amount of capital I have and then make investments in the Bitcoin space that is illiquid. And so that's really, it's a big deal for us to be able to do that as well. And that's the long-term play. So do I recommend this for everyday people? No, I recommend that you get the Bitcoin that you want. You put it away and you add to it if you have opportunistically. If I didn't have a hedge fund, in fact, my personal account, that's what I'm doing. So that's me. That's the way I look at it.
Are there any indicators you're watching, any metrics you're watching that are going to signal to you that the next run-up is coming?
Yeah, I mean, I'm looking at where this thing has been consolidating in a channel, and I think that the first thing that Bitcoin needs to do is take this $62,000-$65,000 level. that's just technically, just looking at a chart technically, you can see that it really needs to take that first. But there's this pretty big channel in there that it's been trading in, and it's kind of like this massive bull flag, right? So the question is, and I don't know if I can share my screen to show you what I'm looking at.
You should be able to. Yeah.
Let me see if I can do that. I'm gonna attempt it anyways, but remember, I'm not a tech guy, so bear with me. Let's see here.
We got
Big
yellow,
green bottom,
so he's
button at the bottom.
yeah, he can do the technical analysis if you need it.
Okay, you guys see it?
Mm-hmm.
Okay, so there's kind of this long-term channel that's been here, and I've got to credit Checkmatey, James Check, who alerted me to this long-term channel here. But it's interesting if you look at this, but just ignore this bottom one for a second because I'm looking at the daily here. Okay, so if you look at this daily chart here, you've got this run up that we had right after the ETFs were created, right? The spot ETFs.
Mm-hmm.
And then it's just been consolidating in this channel for months now. We're going on 5 months here. And so this is just a massive bull flag, right? And what that means is that
bullish div.
Yeah, so it's just showing that with this run up and you've got this consolidation. Once it breaks out, I mean that's it. You doesn't need to
James,
once it breaks out here, then it's gonna have to take this all-time high. So that is a unique part about this bull flag. But once it takes that, it's kind of price discovery mode. But if you pull back a little bit, let's go back a little bit and look at this. This is the weekly. I mean, and you've got this channel this has kind of been trading in, and you can even widen this out a little bit.
We had something similar in the bottom also.
So for anybody who doesn't know what a bull flag is, and it's definitely not me, I definitely know what a bull flag is. Could you explain what that is? For people other than me.
So it's basically what you have is you have a run up, and that's your flagpole, right? Mm-hmm. So this is the run up. Then you've got a consolidation that is typically consolidating a little bit lower, but you're seeing a channel that's of consolidation, and then once it gets above this channel, it'll break out.
He's drawing a nose. He's drawing a nose.
Oh my God!
Stop it!
Come on, guys.
That's not
rope.
So, but
Greg, get ropes.
Here's the interesting part, though. You see this right here, this lower channel that acts kind of as support. So that's the interesting part. So we just hoping it doesn't break down through the average of this channel, which I don't think it will. That's at 53,000. Look, it broke down here to 49. That was an overreaction. So unless we have some sort of market event and we just are continue along here like we are, I expect it to continue to consolidate, and then that's it. We're getting close, though, in my opinion. The big thing you're looking for in the bull flag is for the volume down here to pick up. So we'd like to see volume like this, like we saw in the run up, on a breakout. That would be good. So that's the way I'm looking at it, anyways. On a technical,
in history, if you see when the craziness happened, like the bull run is like full with consolidations like that, like bull drops like that, consolidations, call them like that, and then pumps like crazy, and then again, like it's a fractal of that.
Yeah, you've got to have that consolidation, right? When you look at charts like that, it's really just market psychology. It's just how people are feeling about what they've invested in. Do they understand it? Are they making money? Are they losing money? And then you get everything kind of washed out, but you have people like us who are just holding it, and we just know that we're just waiting. We're waiting, and I'm not going to sell it. We're waiting for it to happen. So I'm not trading around it like that. That's just not what I do. But I am watching that closely for entry and exit points to what I was talking about before, but personally, I'm just waiting for it to go to, 120. Let's see.
Personally, you're going to get a better feedback in the bigger view of where the market is by watching your timeline and how much interaction your memes have.
It's true.
Than doing TA.
Yes.
than doing TA. Like
GTA
I
is
really
more-
mean that.
Extreme fear right
True.
now. Extreme fear.
Extreme view.
So you're
what
saying,
kind
so
of
when can Yellow stop doing his spaces? You said 120. When are you thinking it rips through 120?
2026.
Who, me? Are you asking me?
Yeah, we're trying to figure out when Yellow can hang up the microphone for DSB.
and he can stop believing finally.
What does Yellow not believe?
Yellow, why don't you go
like,
ahead and
so-
give him the rundown of what this is?
So I'm
That life-
doing for 3 years now. I'm doing every day nonstop. I'm doing a space where I play Journeys Don't Stop Believing song 3 times.
Oh yeah, I've seen it. Yeah.
Yeah.
Yeah,
So
again.
I'm doing it until 100K. So they're asking like, when, in your opinion, that's gonna be
This year.
this year?
Wow.
Ooh, this year, 2024.
Wow.
I think by the end of this year we are knocking on 100 because once we get through here, once we get to an all-time high, barring any like
Craziness.
catastrophic
Okay.
market
yeah.
event, obviously, if we're just doing what we're doing here, we don't. So let's assume that we have an election that is not called off because of war or because of some sort of stupid pandemic that they make up. If we just are. We have our plain vanilla, sell off and we're going into recession. We're going to print money, QE. I think we rip through our all-time high, and it's not going to. I think this is an October, November thing. Let's see what happens in the election, but then we rip through, and then it's just price discovery. I mean, there's only mental barriers from there. Small mental barrier at 80. A mental barrier at 90, and then a big mental barrier at 100. So we're just going to but people are going to know that. So you'll have a lot of shorts that can get wiped out in the 90s, pop up through 100 and then come back down. And then it'll consolidate again. And then it'll run again once it gets through 100. And then that's it. Then there's this FOMO that I believe will happen on the institutional investor side because they've all been waiting around watching like, nothing's happening. But once it starts to run, they're not price sensitive. They're going to be like, I need 1% in my portfolio. So go buy 10 million bucks or go buy 100 million bucks or go buy $1 billion worth. I need it because I need it in my portfolio. And they don't care. They're just like, go along with the market. And then when you have 10, 20, 50, 100, 1,000 institutions that are all saying go along with the market, that's price discovery. They are not going
James, how is the narrative yet? The opinion that you just mentioned, they don't care about it that much. After a level, they don't care about the price. They just need a percentage of the portfolio to be allocated in Bitcoin.
Right.
That sounds logical to me. But at the same time, there's another narrative, like a lot of people are saying, like they're actually manipulating the market in order to buy lower. How are both true?
Well, both are true right now because we don't have enough institutions that are in it yet. We just have a smattering of them, just a few. Once there's critical mass, and there's a lot of them coming in, good luck trying to manipulate it. That's going to be very difficult. Okay. But right now, whales can whip it around. You can see online what the perpetual future rates are, what the leverage is, exactly where everything's trading, and where you can wipe out $200-500 million worth of shorts or longs. You could see it right online. So that's something that's kind of unique here. And that makes it easy to manipulate short term. But once you have investors coming in that have billions and hundreds of billions of dollars, like I know a few hedge funds who are in it now. I will not name them because I know the managers. These are really smart people. Like they're very smart people, and some of the largest hedge funds in the world, and they're in it. And so they're in it small, tiny compared to what their hedge fund is, but they're in it. And that's called dipping a toe and kind of wading in to see what's going on. And it forces you to do the work on it. It forces you to understand what you actually own. And so it's going to get to the point where there's that FOMO. y'all might remember that happening. I don't know. I'm older than you guys, but you might remember that happening in things like Amazon and Apple, but really Amazon was a big one where it was just this FOMO that everybody had to have a piece of it, I mean, things like that happen.
Do
The
you
difference,
think a potential FOMO like that, which is multi-billion-dollar companies in a market that is in the trillions, is going to be greater than the FOMO we experienced, let's say, back in 2013, where the market was way smaller, but we had actually multi-millionaires and billionaires playing around the same row?
so I'm not sure I understood the question, but are you saying, do I think that it's going to be more
bigger of a
FOMO is going to be
FOMO
bigger
or
now because of the institutions?
Yeah.
Well,
Because back then, the market was smaller, but the players were smaller also, right?
Right.
Fractally was kind of similar though.
Yeah,
No?
probably pretty similar, and that's why you look at things like the power law and all that some of it makes sense just because of the nature of liquidity and what you just said, the fractals of it. But remember, it all has to do with liquidity, and that's why you always hear people say there's a multiplier effect to the purchases. So when I've traded very illiquid stocks before and micro caps, and so the issue with those, there's always friction getting in and out of these positions. So even if you love the company, even if you believe in it wholeheartedly, you think that they are a great bet in your portfolio. The problem is you were going to give up 5, 10, 20% on the upside, just getting into the trade, another 5, 10, 20% getting out, because the friction of moving a good percentage of that stock was just too big. So now you've got the question of Bitcoin. So
yeah, but they don't care about that, though.
No, you care about it's $1 trillion asset with
exactly
with now you've got maybe as much
your gains are going to be so massive that you're willing to give that up.
Probably, but what I'm saying with institutions is if you have $1 trillion that's chasing it, remember it doesn't mean that it goes from 1 trillion to 2 trillion. It doesn't just double in size. It means that if I'm not selling and you're not selling and Sean's not selling and Greg's not selling, it gets to be there's a pocket of zero liquidity. So you could literally buy a $1 worth of Bitcoin at $100,000 because nobody was willing to sell it between here and there. And now it's worth $100,000. So the question is, how much liquidity are people seeking on the way up? That's the question. And I believe that once we get through this all-time high, you're going to see liquidity dry up rapidly. I think that it's going to evaporate because people are like, oh, it's an all-time high. And then it's going to pour back in at $100,000. So there's going to be pockets of like that. And then once it gets to $100,000, people are going to say it's going again. So they're just going to step away. So one of the issues that we saw in the market just a couple of weeks ago was not that there was so much selling. It's that the buyers just evacuated the floor. Like they just evaporated. Like there was not a ton of volume. So that's why you saw the VIX spike up so greatly. It wasn't that there was so much volume on the buying of the
upside,
on the upside of the puts, right? It was that spread was so illiquid that the VIX went through the roof because of volatility of the S&P puts and calls. So it's like it's hard to tell, but that's my belief that that's what's going to happen. And so it will be bigger, in my opinion, than it was back then. The question is, like you're asking, will we have a 10 to 100x on this run? No, I don't think so. I don't think we'll have 100x on this run. So it's just not. You know, I could see a 5x, you
Do
know.
you believe in diminishing returns?
Mm.
I think. Well, I want to let you answer, and then I will say what I think.
I want to hear what you have to say.
And after that, I would like, before we go, because I know we're like near to the close.
We're getting close.
I would like a comment about like the ETF, the Ethereum ETF, and what the fuck went wrong with it.
You taking notes, James?
It's Ethereum.
Yeah, Ethereum ETF. I just
don't
want
know.
to
I truly don't know enough about it to answer intelligently.
James' son had him buying Ethereum back in the day, and then he was like, "Nah, I'm going straight Bitcoin."
Yeah, we went Bitcoin, both of us, you know. So he convinced me to get into crypto, and I convinced him to move over to Bitcoin.
Nice.
So, but he
nice trade.
Great. You know, he bought Bitcoin at like 25,000, sold at the high, bought Ethereum, sold that at the high, and then bought Bitcoin again. So he did pretty well. I think I need to hire him. So, but
you should hire me too. Like I predicted twice the bottom on the market.
You did.
The prophecy 1 and 2.
Yes. All right. Send in your resume, which consists of a one line why I should hire you. So
I'll just make you a meme.
It's just it's a video meme of the prophecy. Is
pictures worth 1,000 words, James.
Hired.
That's really actually our process. That's our hiring process. That's how it works.
Or maybe I'll send you my trading video thing I made.
Is the hedge fund investing in any meme companies, James? Any Bitcoin companies?
Any meme companies? No, not meme.
No, not any Bitcoin meme companies. No, not meme coin. Bitcoin meme.
We don't have any meme companies in our portfolio as of yet.
Not yet.
We
Not
should.
Yet, he said.
So you're saying there's a chance.
You're saying there's a chance. There's a non-zero probability.
Stop trying to bite the guy, for fuck's sake.
I'm just playing. I think here's my thoughts on diminishing returns is personally, I think there's going to be diminishing returns every cycle until hyperinflation. That's what I think. Because the number gets bigger and bigger. The halving isn't as impactful. It's still impactful, but it's not as impactful. And then we hit hyperinflation, and then it's gonna go crazy. That's
what is hyperinflation though? From the 1970s, we have already hyperinflation. It's like a term that it's like no. It's like
hyperinflation. The way that I look at it is when
mega
we
inflation,
have complete loss of trust.
We have kind of complete trust of trust. They used to buy a week's grocery with $1, man.
No,
that was in Greece. That was in Greece.
But people still work for the dollar. You've not lost trust for it when you work for it.
Everybody in the world wants dollars. It's just reality. And until that collapses, we're not hitting hyperinflation. I agree.
Yeah, but that's not like an argument against hyperinflation. That's an argument in favor of hyperinflation because they have less trust in their own currency, that they're going for the least shitty one, which is the dollar.
Right. So every other currency will hyperinflate first, for sure.
Yeah.
Yeah. So, except maybe the Swiss franc. I don't know. Yeah, I know. I agree, Sean. There's just when you have there, you're going to have. I think you're going to have cycles that still surprise people.
Yeah, that's probably true. That is probably true.
And that will be because of institutional adoption and possibly manipulation. It could be manipulation to the upside. We don't know. You know, when you get a nation state that announces that they're buying it, not just El Salvador, you know, but you have something like China, United States, you know, if they say they're out there actually physically buying Bitcoin, or they've added to their treasury, that's going to be a big deal.
Yeah, when they start printing the dollar to buy Bitcoin, you go, okay, maybe that's a
signal.
That's 100x round right there. But that's probably also hyperinflation.
That's why I don't put anything out of the realm for Bitcoin. If you know, statistically, you could see where it probably should go, but then anything can happen with this thing. We've all seen it.
Yes.
So we've had Rusty was very sweet to volunteer to do Artie's question this week. Rusty, when you get a moment, if you could go through that with James, that'd be great.
Yeah, just on a personal note, I just want to say I really enjoyed everybody's reaction to it's going to 100K this year. Like we've never done that before. Like, oh, this year, 100K this year? Oh my gosh. Like, hello. How are we, James? Cup of tea? little cup of tea. All right, if the meme factory did exist, and we all know it doesn't, which one of us would you like? Which one of us would you retweet? Which one of us would you mute? And which one of us would you zap?
All right. So which one would I like? I think I would like Sean. He's always super supportive of me.
Let's go. Let's go.
All right. I think that I would retweet Greg because he's got some pretty solid memes that my wife has even commented on. Yeah. So
You might have.
That's
Sure you're not talking about
he's like, is that Greg, the guy with the memes? I'm like, that's the one. The guy the guy I met signing potatoes at the first Bitcoin conference I was ever at.
I confuse so many people with that, but everybody remembers.
Yeah.
I would have to.
I think you were getting filmed while you were signing potatoes, so it was like, who is this guy?
It was so absurd.
All right. So what were the other ones? Am I commenting on, or am I retweeting? What am I doing? No, I retweeted.
You got mute. You got mute to go, and you also got zap. Mute and zap.
I love your commitment to this accent.
Yes. So I can't mute Rope. I got to zap him. So he's got to, let's go, buddy. And
all right, and let's wrap it up. Let's wrap it up.
So he's been very polite and quiet, but I appreciate it.
Said no one ever.
Just for the record, you can also use the last one on anyone in the meme factory. It doesn't have to be someone
He
here.
feels it coming.
He doesn't want to get muted.
I have got to mute Peter Schiff. He's killing me. Killing me.
He's not part of the meme factory.
Not part of the meme factory.
Yeah.
Got to pick a meme factory.
Actually, he should be. You should make him part of the meme factory. He should be honorable.
Oh God, I can't do
it. I had a theory the other day.
As a parody account. That's right.
I had a theory that he's actually the Bitcoin magic internet money wizard, and Peter Schiff is just his like Clark Kent appearance. Like he's trying to blend in, trying to pretend.
All right, James, we got to get a real mute out of you. You've got Yellow, Rusty, Becca, Marcus. Who I'm missing like 12 people here.
You can mute
Chair
James.
Force.
Okay.
Force
Pedro.
Yeah, mute Pedro or Becca.
Take your pick.
Sweet.
You got to mute somebody.
Why do I have to mute?
It's the game, James. You got to mute one of us.
No, come on, James.
That's the
I'm
game,
muting
man.
myself.
No, you gotta be evil.
Got to be. You screwed up retweeting
know
me.
me by now. I don't attack on
It's not attacking. It's not attacking. You're playing. You're playing a game.
You gotta mute somebody.
All right.
Do it.
I gotta mute somebody. Sorry, Yellow. We gotta mute you for a moment.
Okay, it's okay.
Oh, there it is.
Nice.
There we go.
No problem.
Ouch. I didn't know you were like that, James. There you go.
Get wrecked, Yellow.
Too many watermelon memes. That's why.
All right, so
That's yeah.
James, I want to make sure you get a minute to tell people where they can find you. Talk about any projects you're working on, and where they can go to find those before we head off for the evening.
Awesome. Well, thank you for having me. You guys are fun. It's a super good podcast to be on. So I'm obviously the Bitcoin Opportunity Fund. It's at bitcoinopportunity.fund. We are closed. It's for number one. It's for accredited investors. It's not my rule. It's the SEC's. There's nothing I do about it. And this one is closed. But we'll likely have another one in the future, especially with what I think Bitcoin's going to do here. So if you're interested in something like that and you have your Bitcoin position, you want to find ways to augment it, then reach out. And if you're accredited, I have to say that SEC rules. And then, my newsletter, The Informationist, I write that every single week. And so you can find that at jameslavish.com. I just take a complicated financial topic and simplify it for you. So that's the other thing. And I'm on Twitter, James Lavish on Twitter.
All right. Thanks, James. Appreciate you spending some time with us, man.
You bet, guys.
Everybody stay safe out there. Have a good night.
All right. Good night.